Hey guys, this is Houston Trong from thetradingedge.org, and this is your weekly market outlook for April the 1st to the 5th, 2019. So, as we wrap up Q1 of 2019, I hope you had an amazing Q1. It was quite the run for equities this past quarter, and I hope you managed to catch some of it. And I also hope that some of these videos are helping you catch some of it because it's been a pretty easy trade to date. So let's look at the charts now, and let's see what the new quarter has to offer us and see if there are any clues around how we need to be following and watching the charts. I'll talk more about this perhaps in another video, another blog post, but the point of this video is not to try to predict the future. And I think that's true of any technical analysis. So I just want to be clear as we get into some of the charts that technical analysis is rarely, when done properly in my opinion, is rarely about trying to predict the future, especially as it pertains to price action. The price action helps us to be responsive to the trends. So all price is an unfolding of, all price action is the unfolding of price. So the best that price action can offer us is the ability to be able to objectively see what's happening in the markets so we can take favorable trades that are in the general direction of the overall market. It's really as simple as that. So there is no predictive value necessarily with price action. What we're simply trying to do is see where the market's going and riding along with it. So in a way, it's trend following. So with that being said, let's launch into the charts. So that's a bit of a preface today, and let's get into the charts now. So quite a bit to cover for the start of Q2. So let's get into it. So first off, let's do a bit of review and start from the top, and that's around VXXB. So we were watching this very carefully going into Monday, this past Monday. And what happened on Monday was that we had that gap up, if you recall. It gapped up right there. So here's our daily chart in the top right hand corner. It gapped up that day, and it pushed higher, and it nearly filled this gap right there. That gap was at 33.23. So 33. Is that right? Correct? Sorry, back here. Sorry, the gap was 33.23, and we got very close, right? So if you actually look at the 4-hour chart now, I'll zoom in here. The gap's right there. It came so close. We were just literally 20 cents away, less than that, a little more than 20 cents away. So we came really close to closing that gap, but couldn't quite do it. So as I mentioned at the end of close on Monday, what we had here was an inside bar on last Friday. It broke up right to the upside on Monday, and then it came really close to closing that gap. So that close should actually be 33.23, not 19. That's the low of that bar, but 23. And the fact is, and I talked about this on Monday, that the buyers of the VIX could not close that gap, because usually gaps are like attractors. Because they couldn't close the gap, it was really bearish for the VIX. So the next day, it actually gapped down, and for the rest of the week, it could not even reclaim that. In fact, right here, look at this day on Wednesday. It hit the weekly open. It nearly turned green for a few moments before selling back off again right into the close on Friday. So we had that that gap up. Then we had this outside-inside pattern develop on Wednesday, and it resolved to the downside. It was actually a very slow drift lower as we broke back into this range again. Look at this here, right? So this little Browning formation, it held a support for a day for 2 bars. That's 2 4-hour bars, and then it gapped into it on Friday, and it was a slow grind down, right? It wasn't like a quick grind. It took a lot of time as the Friday gapped down in the morning. Then it basically it went down a bit, but then it came back to where it opened. Then it went down lower into the close, and it created a slight lower low there. Now the expectation for Monday is that it continues to go back through the range once again. So the range is this broad information, and now if the sellers of the VIX and the buyers of equities can keep it up, it's going to come back through the other side, right? So now it tried to take out the top end, it could not do it. So now it's going to they're going to try to test these guys who may have gotten long down here. If you look at the 2-day chart, what we have actually happened here now is we have this inside bar sequence. So here, right, on Friday, it broke below that low, so it went inside and down, right? So now you're seeing the situation of inside and down. Now the pivots are here. So that's what they're going after. So on the macro time frame stuff, right? So the monthly, it closed red. And if you look at the 3-month chart now on the VIX, what do we have here? Look how simple that everything becomes when we make that 3-month chart our focus, right? We have an outside inside pattern. So on Monday, when Monday comes around, if they can take out the lows of January, that is 28.12, right? So let's go ahead and draw on that line here, 28.12. If that low can get taken out and they stay below that level, 28.12 right there, so not this week's lows, but the prior week's lows, if they can take out that low, then the next pivot in play is this bar there, October's lows, right? So October's lows, we'll draw it in really quickly, right there, right there. And that, you know, if the VIX can break below here and, you know, take out these pivots down here, then this would mean equities would go back to all-time highs. There's a very good likelihood of that happening based upon the VIX chart and some of the equity charts we'll look at in a few moments. Let's go to the next one. So let's take a look at SPY now. So SPDR, what's that look like? So on the SPDR chart, on the daily chart, on Friday, we went inside and up. So we were watching this all week this week, right? We were saying, wait for it, wait for it. Which way is it going to break, and can it hold the break, right? So if it breaks above, can it stay above the inside bar break, or does it come back through the range again and fail? And on Friday, it broke up. It wasn't an easy day because the bears, the sellers, actually managed to push things back down again, right to the breakout point. And it looked like they're, you know, the buyers are going to give it up for a moment. If you're looking just at the SPDR chart, now didn't look that way if you looked at the underlying components of some of these indices, because if you looked at some of the underlying components, they were very strong throughout the day, and it was unlikely that the bears are going to be able to turn all those stocks, those individual stocks, red. But we had that inside bar to the break to the upside. It broke above, it stayed above it, and look on the 2-day chart, right? Look at the 2-day chart, inside bar break to the upside, and it stayed above it now. So the pivot to go after now is that pivot and that pivot. So here, as I said again during one of the weekly videos, this is one of my favorite patterns, right? So outside and down, right? So outside bar and down, inside bar sequence. Now we're coming back up through the range once again, because the sellers, they try to push it. They looked good. They took out all these guys' pivots. But as soon as this bar happens, if you're a seller, you have to worry about this, right? Because now, if this bar gets taken out, what you did on Friday, they're coming to get you up here. Okay? So in the SPDR, we have that situation now where we're making our way back up on the 2-day chart. And the 4-hour chart, if you look at the 4-hour chart, which is what we were talking about all week, there is our signal, right? Outside, inside, right? That's a lot of consolidation. And then boom, resolved to the upside on Friday. And now we're going after that pivot. So that's the pivot to be watching for. And if you're a seller, and if you're a buyer, you don't want to see it come back through the range again. So the premise of going back to all-time highs, on the short term, we're getting validated if we begin to take out our lows, right? So this low gets violated, and then, you know, we do inside bar reversal on the daily chart. So if the daily low here, so right, you had a breakout, if it comes and takes out the low of the breakout bar here, then there's a chance that we come back down again. Because on Monday, we get a fresh quarter, a fresh month, and a fresh week. So all these orange and purple lines, and even this blue line here that you see down here, it will all reset, and it will all be at the same place. It'll be the exact same open. So you really want to be paying attention to which side of the open that price is trading on. Is it trading above the month, the quarterly, the monthly, the weekly open? Or is it trading, and the daily open as well? Or is it trading below that, right? So Monday is going to be an interesting day because we're going to have that buy set quite quickly. And then Tuesday, you want to see what happens again because you want to see things reconfirm. So on the bottom left-hand corner, weekly chart, right? So if you're a seller, or if you're a buyer, what you don't want to see the sellers do is you don't want to see this inside bar breakout get taken out. And you definitely don't want to see this low, this weekly low, get taken out. Because if this weekly low gets taken out, you have to watch out that it doesn't come back down through the range. But on the quarterly chart, right, so pretty green month for the SPY, ends up as a bullish momentum hammer. Look at that, right? So basically we have an inside quarter, right? So now, can it go inside quarter and up back into the highs? And that's what we want to be looking for the SPDR. Okay? Now, on the Qs. So the Qs now, kind of the same sequence. So the 4-hour chart, all the indices pretty much have the same pattern. Outside, inside, outside, inside. The Qs are the strongest out of all the bunch right now because they're sitting on top of the weekly open. So the bias is to the upside. It took out this pivot here as it was supposed to do. The question is, does it have enough strength now to keep going? It looks like the Qs had a really strong month, and so the momentum right now is on the Q side. Because look at it. Last week, that's not this past trading week, but the week before that, we end up with a shooting star. So the bears had their chance on Monday. They had their chance to take out the lows, but it lasted so quickly, right? So it did not last long at all. So here's the 4-hour chart. It opened below the low, and then the buyers quickly bought it up. Here on Wednesday, it broke below again, but look, the next bar is inside, and then they were able to break it back up. So the bears were not able to push it lower, and the buyers saved the day, and they defended where they needed to defend. Back to the 3-month chart. Look at the 3-month chart. This is one of my favorite patterns, outside, inside. So on Monday, or anytime, this quarter, can they go outside, inside, and up? Because if it goes outside, inside, and up, that's the pivot that they're going after. And then we'll get back to close to all-time highs. This pivot gets taken out, right? Actually, that is all-time highs, 187.53. Okay, so that's what you're looking for if the buyers can continue to push it higher. Just like the SPY, you do not want to see this inside bar break reverse. Because if you get inside bar reversal, then that's going to change the narrative, at least in the short term. You still want to see the longer term charts get broken before you flip and become all out bearish. Okay, let's talk about the Russell. Russell on the quarterly chart. Look at that, inside month, inside quarter, right? So really, it's inside of Q4's bar. Now on the monthly chart, again, we have this situation. We have a inside month for the Russell. So the buyers did what they were supposed to do, as they defended. So they were not able to make the chart really ugly because, as you mentioned last week, had the sellers been able to take out this low, it could have gotten ugly really quickly. It could have come back down here to test this pivot and then that pivot. But the buyers, they held this as an inside bar for the month. It came very close, right? So had that low gotten taken out, 148.39, the low was 148.41. So literally 2 pennies that they defended from turning this bar into a red bar to the downside. And they defended exactly as it right here on the Monday, right? So that's what happened on the 4-hour chart. So right now, Russell, if you look at the 4-hour chart, we have this sequence: outside, inside, breaks to the upside, right? So on the 2-day chart, inside bar break to the upside. Can it continue? And we had a bit of a red day on the Russell here. But here, as we talked about, look at the weekly chart: inside, outside, right? And it went down. So here on Monday, it looked bad. It looked really bad, but the buyers defended. And so they managed to turn this week green. So now, if they can break above the high of this weekly high here, so the weekly high is 153.97, then this puts the buyers back in control, and the pivots in play are that pivot there. Because this is going to create another broadening formation. What's actually happening is if this becomes the low and takes out that high, then what we're going to see happen here is something like this. You're going to have the situation where something like that transpires, and they're going to go after this high here. Okay, and then it could possibly grind higher depending on the strength of the buyers. So that's the formation that's kind of playing out right now. Let's talk about the Dow very quickly. So the Dow, same as the rest of the indices right now. The indices are trading very, very similarly, although the Dow and the Russell have been the weakest. But in the Dow, on the 2-day chart, same as the others, inside bar and up, strong day for the Dow. Look at that Friday, very strong day, inside day and up, one of the strongest on Friday. And on the monthly chart, right, inside month on the Dow, and guess what? Outside, inside on the quarter. Okay, so here again, just like the other chart we showed, a break above this quarterly high puts that pivot in play, and then we have the chance for all-time highs once again. Okay, so right now, if that narrative plays out, there's going to be a lot of simultaneous breakouts that are possible because all the indices are lining up to break the same way, and that's what we're looking for. Because if you can get this string of dominoes to all fall in the same direction, then you really have a confluence of activities that's going to push this narrative higher. So this would be a lot different if we had only 1 or 2 indices looking bullish and the other 2 indices looking bearish. Then you wouldn't have that confluence, right? But right now everything is lining up in the same direction, which makes it a very compelling trade. So right now, the trend is certainly up right now. You don't want to be fighting this. We've been saying this for a while now, right? We've been saying the possibility for all-time highs is not far off, and it certainly looks that way when you take a step back and look at the 3-month chart. Okay, so let's take a quick look now before we get into oil. Let's bring up our old friend, the S1FI chart, right? So the number of S&P 100 stocks currently trading above their 50 period moving average. The last time we talked about this was about 2 weeks ago, and it had actually begun to create a bearish divergence, meaning there were fewer S&P 100 stocks trading above the 50-day moving average as the SPY was going higher and higher. So as you can see here, SPY is the candles, right? It was trading higher and higher, but the actual number of S&P 100 stocks above the 50-day was actually going lower and lower. So now, we had a bit of a corrective activity here. And this here now, it isn't telling us that clear of a story. Right now, it's not telling us that much of a story. What I see happening here is that we actually had a dip here. We actually only had about 58% of S&P stocks, S&P 100 stocks trading above the 50. But price wasn't actually able to dip much lower. Look, so back here, right, we had 72% roughly, and we had made a lower high here. Lower low, excuse me. This time around, we had more stocks that fell below the 50-day, but they weren't able to push the broader index as far down. So that's a bit bullish. So now you want to see, as we get back in these highs again, this is actually quite bullish. As we get more and more stocks, coming back up again here, we want to see what that looks like as we get back into these highs. All right. So one thing you do need to watch out for is, I looked at all this different sectors. I'm not going to spend the time going through all the sectors that I have here on the right hand side, but the one that stands out as being the weakest and perhaps the biggest challenge for the buyers is the financials. Obviously, with the yield curve inverting and that being in the news, the financials, so XLF being the financials, ETF, KRE being the regional financials, they've been hit the hardest. And even so, if you look at the broader term charts, the more macro chart, the 3-month chart, it still only ended the quarter as an inside month. So really not that bad of a picture. On the monthly chart, it looks a little bit worse, right? So this is why it's so beneficial to zoom out and not get too influenced by the tick by tick movements. So in the monthly chart, what do we have here in the financials, right? Outside month. So that looks ugly, right? Looks like an ugly chart. So what's possible is that with an outside month, if the sellers can pick up momentum and break below this outside bar low and stay below there, then you have a chance for it to come back in here and take out that pivot. But look what happened this past week. It looked like they might be able to do it. Remember on the prior week, we had it outside inside week. It broke to the downside, created that outside bar, and it looked like it had potential to be bad for the buyers. However, as I mentioned here, it's not enough just to break below the low of an outside bar, because this can happen, right? If the buyers step back in, this can invalidate the bearish scenario, because now if the buyers can take out this high here, then that's the pivot they're going to go after. So the outside bars are kind of one bar is not enough as pertains to an outside bar signal. You need to see 1 or 2 subsequent bars before you play simply an outside bar, because again, you need to see some confirmation to see what's going to happen, because this can happen. So if you got short here, right, before this, let's say you see this outside bar, you're like, okay, I'm going to buy a bunch of puts. Well, this was not a fun week for you, right? Because basically it just grinded higher against you. Same thing with KRE. KRE's been actually a worse chart than XLF, but same sort of situation. Okay, so these are the regional financials, so you even have more exposure to some of the lending rates. Look at the outside bar. Outside bar looked really bearish. It was down close to 10% 2 weeks ago, but this week, look, it started 1 tick lower. So low here is what, 48.98. Low here is 48.97. Okay, so it made 1 tick lower. You thought you were going to start breaking down. Nope, the buyer stepped in right away. So on the 4-hour chart here, right, the buyer stepped in right away on Monday, right there. Okay, it created an outside-inside pattern, and boom, it never looked back. So if you shorted down here, you're getting squeezed. And where do you cover if you put puts on, or you went short on this bar, right? So now, if it breaks the top of this bar here, they're going after that pivot. It's going to look like this, right? So here's the 4-hour chart. If you're short in here somewhere, now they're coming in to get you, right? It's coming back through this range here now, and you have to watch out that it doesn't do one of these things, where you have this broad information here, like that. You don't want to see it do something like this. Let's go back a bit here a bit. So you do not want to see this thing come back up through here again, back to all-time highs. Well, not quite all-time highs, but at least reclaims that range here, the prior month's highs. Okay, but that's certainly possible. So you definitely need to be watching out for that if you're short regional financials. Okay, so that's the one out of all the sectors, probably financials is probably one that's probably the most worrisome if you're a bull. Energy, you'll need to be watching that as well, but we'll keep an eye on that during the week, and I'll report back anything if it gets interesting. So let's keep moving. Let's talk about energy for a second. Let's go to UK oil now. So oil still pretty strong. So ends the month green. Okay, inside week. So this week there wasn't a lot of fireworks there. So look at how tight this week was, right? So here's the week starting there. It was a tight week. It actually created, it's a very, very tight situation here, and it created that inside week pattern. So this week now we're gonna want to see how it plays out, and we might get that break on Monday, right? Because here's our week end, or ends the week like this, outside, inside. So where does it break and how does it break on Monday, right? Because these, the purple and the orange, they're all going to be wherever this thing opens up. So we're going to let this break dictate our bias for oil. Now, it's important to notice that oil has been very correlated with the overall equity markets. So if you're a buyer, if you're a bull for equities, you want to see oil continue to move higher here. That's what you want to be looking for, because that's what's going to give equities a higher chance of rallying, especially if you can pull some of those energy stocks up. Okay, let's talk about bonds really quickly. Bonds, another pretty strong week. What can you say? We pointed this thing out, man. It's been 2 or 3 weeks now. Even just kind of alerting you to the possibility that bonds are going to rally, and sure enough, we got that inside and now outside month, and we're going after that pivot there. I think at some point bonds will take a pullback, take a step back, but the charts are not showing that yet, right? You're not seeing where that's going to end yet. If it's going to break down, right, it would start here. It's going to start on this chart here. Well, let's not say that. It'll become a bigger pullback if it can break below the low of this past week's up bar, because here's an outside pattern to the upside, right? So this is momentum. When you see an outside bar like this, that's momentum to the upside. Then you had an additional push to the upside, right? So they're really getting aggressive here. This is aggressive because the buyers and sellers took out both sides of the range. So you had both parties involved here, and the buyers clearly won out. Then they got aggressive again by pushing it another week higher. We're getting right into Bollinger Band territory here now. So if for whatever reason they let their foot off the gas pedal, as we know, if you're going to do this Bollinger Band walk, you need to start walking. And if you don't walk and you take out that low, then it can become a steeper pullback. So if you are a long bond guy, or if you want to see bonds stay high, you do not want to see that low, that weekly low, get taken out. If that weekly low gets taken out, then we're at risk for it to come back into the range here again. Likewise, what's possible is that you might have a situation where it breaks even higher up and then comes back in. That's also dangerous if you're a buyer of bonds, or if you're holding bonds, because this is a failed momentum pattern. If it breaks up here and it comes back into this guy's range, the chance comes back into here again. So you have to watch out for that. Now gold, man, much to do about nothing for gold, right? It's people, I see a lot of folks online commenting about the breakout nature or whatever it may be of gold, but as far as we've been seeing, gold's kind of been doing nothing. So on the bigger picture, gold here, it actually reversed on Friday. So outside bar, right? So this is what we just talked about. Here's an outside bar on the 2-day chart. Goes outside and up, right? If it breaks below the low there, it's coming back through here. That's exactly what it did. So on Friday, it opened right there and took out this guy's low. And then once that pivot gets taken, sorry, this is not a 4 hour. This is a 2-day chart. Excuse me. So this is happened on Wednesday, Thursday. Thursday. So Wednesday, Thursday. So this guy gets taken out and then comes back through the range again. It's very hard to trade gold on using the GLD product, as we talked about it before, like the TLT product, because it trades only during the market hours. There's a lot of gaps in this product. So sometimes you have to get involved before the actual move happens. So on the daily chart, this is what it looks like. So this sequence here is like this: outside, inside, and inside, it breaks to the upside, right? You see that? This is an inside bar reversal right there. and it happens right at the weekly open. So as soon as this thing breaks below here, it turns the week red, and then it breaks down, and then these guys are all at risk, and on Thursday, Friday, it gaps down and takes out anyone else who is down here. And did it fill its gap? Not quite. So they still got a gap right there, a gap fill right there. And that's the quarterly open, that blue line. So they came close to coming back right to the quarter. So what does that mean? So basically went nowhere for a whole quarter. So there's the quarterly chart, right? So that, all the news that was gold, it's still there. It's nothing. It hasn't done anything. Unfortunately, it now leaves a long shooting star for the 3-month chart, and it gives you a big outside bar for the weekly. So gold right now, not too compelling. If you look at the 12-month chart, right? This is what I've been talking about for at all our videos. Gold is really not that interesting because it's an inside year still, inside of last year, inside of the year before that, and inside that year. So I'm going to draw this box here now, and we're just going to keep watching this to see if it ever breaks out of this box. All right, so there's your box. Let's change this color because it's a little bit bright. It's a little bit on the bright side. So can gold ever break out of that range? All right, so until gold breaks out of that range, it's nothing to be too excited about. Forget the gyrations. All right, speaking of another type of gold, let's talk about digital gold, Bitcoin. Bitcoin, do not follow the media on Bitcoin and the crypto products because they are definitely biased. They're just looking for confirmation that things are going to go higher. Right now, it's been doing nothing. We've been saying that for the past 3 weeks. Bitcoin, most of the cryptos are doing nothing because right now, this is what I'm watching, right? Inside-outside pattern, and we're probably going to close the month as an inside bar. This is the ideal scenario that we wanted to see, and it's playing out now as we get into Q2. So if cryptos, or specifically Bitcoin, can hold this inside bar just for another day or so, right? The new quarter, new month, new week rolls over on Sunday evening. So if it can hold this pattern until Sunday evening, I'd be a buyer of Bitcoin right above the break there, right? And we're looking to reclaim this range if it can do that, right? And again, when I say that, I mean it has to break out and stay above. If it comes up here, it comes back in, then that's a failed breakout. But if it can stay above and break out, then this thing has a long way it can go because it's been consolidating now for a good 1, 2, 3 months. So watch Bitcoin here now as we get into Sunday evening, Monday evening for that imminent breakout or breakdown, whichever way it happens. If it goes the other way, I'm shorting the other way too. Whichever way it breaks, I'm going to be in that trade. So you also want to be looking at Ethereum. Nearly the exact same pattern on Ethereum. Outside, inside pattern on Ethereum. So again, watch how this outside, inside breaks on the monthly. Because right now it's been doing a whole lot of nothing for close to 1, 2, 3, 4 months. It's been trading inside this very tight range. Okay. So just a couple more stocks to talk about before we wrap things up. One is Apple. We've had Apple on our watch list for a while now because the FANG stocks have kind of been lagging lately. They've kind of been slowing down, and here's one of the reasons why. Right. So there's obviously fundamental reasons why the Apple and some of the FANG names have slowed down. But let's talk about what that looks like in terms of a technical price action basis. So Apple end of the month very strong. You really can't complain with Apple. If you look at Apple, like we have here, outside bar in Q4. Now it went outside bar to the downside, but turned it green, quite green. It was up 20%, in Q1, which is massive for a company that size, right? So this is this whole scenario of just why outside bars are not enough by themselves as signals. See what happens if you short this low, that breakdown. Look, you quickly get slapped, and it's now 20% against you, right? So you don't want to be taking outside bars indiscriminately. So it comes back in here now. If Apple can break above this 197.69, that's the level we want to be watching, right? Well, that's one of the levels, anyways. Then that puts this pivot back in play, and we can look back at all-time highs. So back to Apple for a second. On the daily chart and on the 2-day chart, inside bar, right? We pointed out this pattern here, outside, inside. So here we're watching for the breakout. How far would it go? It broke out, and the good news for those breakout buyers is that it stayed above, was able to close above the breakout level. That's this inside bar's high. One reason why it didn't go anywhere is because it was sandwiched between the weekly open and the monthly open. So see how then you get that purple line there, and the orange line, it's clearly a green month, but it was a red week. They could not break above that weekly open, which kept it as a red week. So that's what that looks like when you have the time frame divergence. Okay, so now with that new week, month, and quarter rolling over on Monday, that's going to put, that line wherever it opens up at, and that might give it the juice it needs to go higher, because now you're not going to have that potential resistance there. On the weekly, it ends pretty strong, right? You got a bullish hammer right there. So a break above this week's high, 192.88, puts even more fire under this chart, and that gives Apple a chance to take out that quarterly high, 197.69. Last chart to show, and here's one of my, one of the stronger stocks in the Dow, Cisco, out of all the names. If you weren't watching this, and I was fortunate enough to get into this one at some pretty good prices. If you weren't watching Cisco, then this is another example of a stock that's made the case for all-time highs. Okay, so Cisco, I don't know if it's all-time highs, but certainly multi-year highs. Look, you have to go back to here, November 2000, before, since October 2000. It's come back that far, right? So it's taken 19 years for it to do that, close to 19 years. But look at it now. And this is how the broader markets can make all-time highs, by doing something like what Cisco's doing. Outside, inside, break to the upside by the other inside bar, and then up, right? So, and up. So that's exactly what you want to see for the rest of the market. So, Cisco, that's an outside, inside, and up. It's just been kind of climbing up and up and up. On this chart here, on the 2-day chart, this is what we were seeing in the indices that I pointed out earlier in this pattern. It looks like Cisco is slightly ahead, right? So here, outside bar to the downside, countered with an inside bar, and now a break above that inside bar, which is what they did on Friday, now puts these levels in play, right? So anyone who got short here now, they're gonna, you're gonna put your stop somewhere up here. If you really want to, if you really believe in the trade, you're probably gonna put your stop somewhere around here, and they're gonna come and go after those guys now, because that's a very strong looking stock. Okay, so when the broader markets are kind of going sideways, you can always find stocks like these that are not that tied to the markets, and these guys have just been grinding higher, and there's many of them out there. So we did go a little bit longer in this week's video, but I hope it helped get you ready for the coming quarter. I hope it's a good one, and that you enter the trading quarter strong and have some good trades. Happy trading.